The real story behind Tether's bank fraud. Tether is a stablecoin cryptocurrency that uses tokens issued by Tether Limited, which is controlled by Bitfinex owners. Many people have accused Tether of being a fraud, but the narrative has only been given in pieces until now. Today, we'll uncover the truth behind the so-called stablecoin Tether. We'll discuss what exactly Tether is, why a new team is taking over the investigation, and what will happen if Tether collapses. First, let's dig into why Tether is being investigated for bank fraud. According to Bloomberg, the Department of Justice is investigating whether Tether committed bank fraud during the early phases of its tokens transactions. Tether says executives and DOJ haven't interacted in over a year, and now the federal prosecutors in Manhattan are taking over the investigation. Transferring cases doesn't happen often, and there are going to be pretty individual, unique circumstances each time, said Robertson Park, a partner at Davis Wright Tremaine who previously spent 2 decades in the Justice Department's fraud section. The criminal investigation focuses on whether Tether failed to inform banks whether transactions were crypto-related, which may have a substantial consequence for law enforcement's control of digital currencies. According to Bloomberg, U.S. authorities have been investigating Tether since 2018. Prosecutors have been sending letters to people informing them that they've been engaged in the investigation over the last few months. According to the notes, senior DOJ officials will soon decide whether or not to press charges. Tether said in a statement that it has routinely maintained an open discussion with law enforcement, including the DOJ, as part of our commitment to cooperation and transparency, Bloomberg reported. According to the official website, Tether is fully supported by real assets in the Tether's platform reserve account. Each unit of its USDT token is worth exactly $1. Why is Tether so controversial? Tether has agreed to pay $41 million to resolve accusations brought by the U.S. Commodity Futures Trading Commission that it made false or misleading statements while claiming that its stablecoins were entirely backed by fiat currencies. Tether cryptocurrency and Tether Limited are controversial due to the company's suspected participation in Bitcoin price manipulation, a suspicious relationship with the Bitfinex exchange, and the company's failure to provide a promised audit proving appropriate reserves supporting the Tether token. Tether also failed to disclose that it included unsecured receivables and non-fiat assets as part of its reserves, falsely informing investors that it would conduct routine audits to show it maintained 100% of its funds, even though its funds were not audited, according to the CEFTC. This case highlights the expectation of honesty and transparency in the rapidly growing and developing digital asset marketplace, said acting CFTC Chairman Rostin Benham. Tether was investigated by the New York Attorney General's office for allegations concerning its funding, and a meeting was held with the agency in February 2021. Tether has since been prohibited from conducting business in New York under the settlement terms. Tether claimed in an email to The Verge that the CFTC order found no concerns relevant to Tether's current operations, and that issues raised in the order were resolved when Tether updated its terms of service in February 2019. What will happen if Tether collapses? Should Tether fail or encounter a major regulatory crackdown, it's safe to assume that it will react just as Terra USD's peg to the dollar began to break with a series of large withdrawals from Anchor and the Curve crypto exchange. Both Terra USD and Lunar plunged to near zero within days. Market liquidity would undoubtedly dry up, and many investors would lose a lot of money. On social media, business TV, and the trading floors of hedge funds and investment banks, everyone began to wonder why Tether was minting so many currencies and whether it had the money it claimed to have. An anonymous anti-Tether blog post titled "The Bit Short Inside Crypto's Doomsday Machine" went viral, prompting CNBC host Jim Cramer to advise viewers to sell their cryptocurrency. "If Tether collapses, it will destroy the whole crypto economy," he said. Each Tether token is worth $1, and about 69 billion Tethers are in circulation, down from 83 billion before this year's crypto crash. Many experienced industry observers and U.S. government officials believe that all of those Tethers are backed by less than $69 billion in fiat money, maybe a lot less. But it's difficult to say for sure whether Tether is lying or not. Tether has never issued an audit. The business published an attestation from a Cayman Islands firm claiming that it has roughly 3% of its reserves in cash, and later released claims that the company had about 10% in cash and bank deposits. Is Tether really backed by the United States dollar? It's also true that banks don't always back up their deposits with cash equivalents. This method is known as fractional banking. On the other hand, banks are regulated and offer excellent transparency into where their money is kept, whereas Tether doesn't. The most important question right now, and it has been for a while, is who is backing Tether? It was initially known as Realcoin in 2014, and the intention was that the US dollar would support it. For a while, the website said that every Tether is always backed one-to-one by traditional currencies kept in our reserves. This text was changed in February 2019 to every Tether is always 100% backed by our reserves, which include traditional currency and cash equivalents and sometimes other assets and receivables from Tether loans to third parties, which may consist of affiliated entities. If the phrase affiliated entities piqued your interest, you're not alone. Tether also announced a collaboration with cryptocurrency exchange Bitfinex in 2014. The Paradise Papers leaked in 2017 reveal that the same people run both Bitfinex and Tether. Tether and Bitfinex are two distinct firms and groups with two different goals, a Tether spokesman answered when he was asked about the relationship between the two. However, Tether was forced to settle with the state of New York. According to the Attorney General's office, Tether has no reserves to support the stablecoins in circulation for the period specified in the settlement agreement. Tether was entirely backed by cash, according to a verification of its cash reserves at Deltec Bank and Trust Limited of the Bahamas reported on November 1, 2018. The money, however, began transferring from Tether's account to Bitfinex the next day. Tether refused to comment on why funds are transferred between Bitfinex and Tether accounts. Tether, as we mentioned, is banned from conducting business in New York under the terms of the settlement agreement. Bitfinex and Tether did not admit wrongdoing, yet paid an $18 million fine. Tether also now must make quarterly reports on its reserves for the next 2 years. So, as an investor, can you trust Tether? Many specialists and analysts feel that Tether is not the stability guarantee it claims to be. On the contrary, it's considered a potential threat to the current financial system, so it would make sense for banks to want to thwart a potential competitor. Tether's dominance in the stablecoin market is undeniable. However, many investors believe that investing in Tether has become too risky. Some experts fear that recent trust-related issues with Tether may have an unpredictable impact on the coin's stability and the future of the entire crypto ecosystem, while others believe that Tether continues to represent stability in a generally volatile market. Thank you for watching. Don't forget to smash the like button and subscribe to be the first to watch the following videos and for more crypto, Web3, NFT, and blockchain updates and news.